Hi, good morning to everyone. I am Dr. D. Radhashi, Assistant Professor in Department of Commerce. Today we are going to see about the functional accounting. In the functional accounting, we are see about the depreciation. In that, we are seeing about the revaluation method. Let me see about what is that. Revaluation. Before itself, we have discussed about the depreciation. In the depreciation, we have the eight categories. In that eight categories, the already we have seen the three categories of this, the revaluations methods. Now today we are going to say about the asset revaluations. It is the increasing or decreasing the value of the asset. It show in the book reflect their current fair market value. The market value is suggested to know we have to handle that cost and price. Cost is nothing about the total of the expense we have calculated in that is the cost. The price what we are selling in the market, that is the price. This is the of the categories which can be divided by this. The asset revaluation as taken by the appraisals of these methods and deactivations of this. The current market price which had been going to increasing the part of selling this product, we can able to gain the changing in a profit sharing ratio. After that, we can able to prepare a fair value balance sheet. The sales merging of the firms, we can able to identify the admissions of the retirement of partners. In the revaluations, we can able to categorize of the increasing the value of appreciation and decreasing the value of their depreciations. These are the appreciation and depreciation we can be handled by the two-way by giving the revaluations methods. In that process, the memorandum of revaluations method have been taken to the asset revaluations. When adjusting in the asset value, it can be taken to depending of the merging of values. In that part, the revaluation method have been taken to the entire of the service to assert the value return to the old features. The profit of the transferring the new partners of the ratios, we can able to identify what are the shares we are dividing to their partners. In that way only the partners are changing their asset values and increasing their asset values by depending a proper amount of the initial stage of capitals, we can able to identify the process. The revaluation method, we can able to check the amount of assets in the land, in the debtors also, and the creditors also. What we are finding, the total value of the asset is increasing or decreasing. In the case of the persons, we can be evaluating. For an example, we can say the land is the total price of the 40,000. In that way of the decreasing the debtors is a 10,000. In that way of the creditors, we can add as a 5,000. The net profit we have been getting the minusing of the land to the creditors and adding to the debtors. We can able to find out the what is the revaluation profit. The final we are getting in this. In this regard, the next we have seen about the asset increasing of losses. In a bill of exchange, we can see about the two persons they are sharing the here amount. We can able to identify their tradings of the bills. In that way only the furnitures and the buildings is increasing the revaluation methods of profit and loss. The building, for example, we can say it is an asset. The asset of the value is the 20,000. The furnitures, we can say it is the furniture. It is automatically have been decreasing in the usage of the furnitures. In that way only the VP of the increasing is the 8,000. The net profit we can able to identify the revaluation method is the 6,000 is the profit by the building furnitures. That way the next we have seen the here normal revolutions. The normal revolutions we can brought from there and the worth of the product. When we are using the product, it is automatically going to a depreciations. So it can be sharing the new ratios. We can say of the 1 is to 1, 1 is to 2, 1 is to 3. We can say the A is a and B and C. We can able to increasing the recording of the profit sharing ratios. We can be able to find out the revaluations method in a memorandum process. In that way, the revaluation method, the pricing of the revaluation, only stocks and machines is reevaluated. The process of the revaluation, we can get the entire source of the process. It can be involved into the putting of the asset and the capital of the goods we can able to get in a proper value method. The last we have seen the revaluations methods of their goodwill. The goodwill, how it can be taken by the asset revaluation process. The goodwill is it is a name. For a brand we can able to give a goodwill. The price of the amount we can able to. For the price itself, the amount can be increasing on the brand name. These are the revaluations methods. Thank you for listening the revaluation methods and the depreciation.